Hit it.
It's Friday, April 30th, 2021, episode 129. I'm Patrick Ceresna.
And I'm Kevin Muir. This week, we welcome back to the show Chase Taylor from Pinecone Macro. We have a fascinating discussion about his favorite investments. To say Chase is contrarian could be the understatement of the year. Stick around to find out what Chase is buying and why. Then Patrick, back from a refresher course at Hogwarts, will do his magic in talking charts.
This week in trading history, we go back to the original Citizen Kane. We end with the segments of No Stupid Questions and Skin in the Game. And folks, we might even drink some beers along the way. So stick around. We got a great show. Lena, hop on. What beer are we drinking this week?
So today we're drinking Sawdust City Brewing Company's Lone Pine West Coast IPA.
Now, I chose this for Chase, Pinecone Macro.
Nice.
And Patrick doesn't have it, though. It's just
yes,
Lena and
there
I.
are logistical inventory issues of landing me the sponsored beer. But
and it is my favorite tree.
Let me read a little blurb about this beer here.
Yeah.
You approach the solitary wind-swept pine as it sits stoically upon its tiny perch of Canadian shield, and you wonder to yourself, why does this beautiful tree stand alone? Then as you step closer, in awe of its majestic splendor, a branch blows down and slaps you right across your face. Sawdust City's Lone Pine IPA is aggressively hopped and bursting with flavors of pine and citrus, loaded with mounds of hops and balanced with a blend of 4 different malts. Like that truculent tree, each glass is like pine bow across your face.
That is an awesome, awesome thing. I didn't realize Sawdust City is Gravenhurst, which is in Muskoka. And I'm just a big fan, even though this tastes like a pine tree.
Well, if I wanted to drink a pine tree, I now know what to buy. All right.
Okay, let me do my side effects. Nothing in this podcast should be viewed as investment advice. Listeners should consult an investment professional before making any decisions regarding topics mentioned in the show. Side effects of too much huddle may include earnings asphyxia, doomsayer dementia, that's my favorite, and zerpy nerpies.
Zerpy nerpies. I've never suffered from that.
Thank God. Okay, let's get to Chase.
Oh, yeah, let's get to Chase. We have a great pleasure to be joined by the good friend of the show, Chase Taylor. How you doing, Chase?
Doing great. How's it going, guys?
It's great. It's Kev here, Chase. I hear you've moved. You've left the great West Coast and you've joined us on the Eastern Seaboard.
Yeah, exactly. So now I watch sports until 1 a.m.
You just can't change teams, so you just have to you basically have to stay up and watch your old teams.
Yeah, exactly. I definitely already missed the West Coast from the time zone perspective and the not having humidity and bugs perspective. But other than that, it's nice to be. You already
have the bugs and the humidity, and it's only April.
I mean, coming from the Mojave Desert, yeah, it's a big difference. So, but yeah, it's just going to keep getting worse.
Okay, so let's talk about the markets. And it's been a while since we've had you on, and you sent us some charts, and they seem to be all energy. And this seems to be your theme right now. Why don't you walk us through what you're thinking and why you're so focused on this part of the market? Yeah,
so I have what I refer to as STM clients, or smarter than me clients, which is
I like that.
Yeah, it's one of my favorite things about doing macro research is you end up with some clients that are smarter than you, and they talk to you about things, and you're like, wow, that's a good idea. I have one client that has kind of been hammering me on coal, and to be honest, it was one of those things where, I mean, it's obviously a sort of a dying industry, so I was just ignoring it. Like, just wasn't going to pay attention to it. It was kind of like next to biotech and financials for me, like just not going to do it. But the more I thought about it, the more I realized, I'm incredibly bullish growth, whether it's U.S. growth or global growth this year. And I'm incredibly bullish natural gas. And if you combine those two things, if you're bullish those two things, then you're bullish coal, whether you realize it or not. I think most people, if you asked them, what does the future look like for coal, say in the next 5-10 years for demand, they would all just guess that it's, falling off a cliff. And as you can see on that chart of EIA projected demand, which honestly may fall short, I think they're kind of lowballing this, but they're showing essential flat demand. And naturally we have a lot of mines closing down, especially in the West. They're going bankrupt. So you could see some production, problems in the future, whereas demand's just staying steady. All the headlines we see about coal are, always about how renewables are taking their place, and that is the truth in the West. But for every one of those we have in the West, there's new demand from somewhere in Asia. So that all adds up to me to be a pretty decent industry, and at least in the next 5-10 years. 30 years from now, I don't want to be in coal, but I don't really stay in trades for that long anyway. So I think for the next,
and are they priced for the end of the
3 years? This works.
Are they priced for the end of the world? Is that basically the idea there?
Yes, you go look at almost any of them. They're like 0.1, price to sales, like just crazy, like price for death. And especially as a natural gas bull, I find that to be sort of ludicrous. I think in the US especially, or really in the West, like we're so used to natural gas being borderline free at this point that we just think of coal like as something we don't need. But if we get a really nasty winter, which I think is very possible, and you get a spike in natural gas, then all of a sudden, all these utilities that have been trying to, tell everybody how green and clean they are probably start doing some massive switching to coal to save money. And if you do have a political environment where we have significant inflation, maybe, regular people don't care so much either. They'd rather have a small utility bill than their utility, being able to flex their green credentials. So
come on, you mean
I think
people will put their pocketbook ahead of their morality when it comes to that?
Yeah, they just might. And that's one thing, like for anyone out there that does a lot of energy investing, if you go through all these companies' presentations, like it doesn't matter if it's oil, natural gas, they have 30 slides about how green they are before they tell you, like, oh, by the way, we might make some money. So even in like the oil industry, it is just pervasive to make sure everyone knows, like, you're doing everything you can to be super green.
Right. Can I jump in here, Cole? Chase, one of the things that when you tell me about the coal and you tell me how it's going to be around for a while yet, it kind of reminds me of the CD-ROM story. And in Canada here, there was a famous company called Cinram, and it basically made CD-ROMs. And a lot of the market started to look at CD-ROMs. And for those millennials that don't know what a CD-ROM is, it's what we used to play our movies and get all of our software on. And we actually had a situation where they priced this company such that the growth in CD-ROMs or the decline in CD-ROMs was, let's say, over 5 years. And all these hedge funds came and they all decided that was way too steep and there was no way it was going to be 5 years, and this was going to take many more years to ease out. And so they all bought it, and unfortunately they ended up being wrong in that it ended up being even quicker than the market expected. And this is one of the kind of my worries when I see the coal story, is that maybe even with like the economics, we still get a situation where, just given the political situation, we switch more than, even faster than the market expects. What would be your pushback to that kind of argument?
First of all, like that is a good way of thinking about it. And I think a lot of people look at the fact that Trump was very pro coal, and coal got just crushed while he was president, while like the EPA, et cetera, were trying to help out the industry. I think at the end of the day, like, what happens to natural gas prices really moves coal more than even those policies. But there have been a lot of plants that shut down and mines that shut down. When you just kind of look at it, it didn't seem like that would be a good idea. Like, maybe the plant, would shut down like 5-10 years before its life, was going to end. And that was, so I think that point is definitely something to watch out for. And it's definitely, anyone that wants to get long coal needs to red team that and watch for that. And I think that will be the case in the West. You're still going to see, European and US coal plants shutting down, and even shutting down maybe faster than we expect. But I also think you're going to get new coal plants faster than expected in places like Southeast Asia, where energy consumption is going to explode and they don't really have the time or money yet to deal with, doing all of that without using coal. It's just so cheap and so easy that it's sort of hard to get away from. It's still the number one source for electricity production in the world, and it will still be in 5 years. So,
Okay. And so basically, you think that although the death of coal, the death of my demise is being greatly exaggerated, it's the same with coal, and the market is just priced, and we're going to have another 5 years, and especially if we get a bang up growth in the global stage, then this thing is going to be rocketing.
Absolutely. I think I wrote my monthly last month on Southeast Asia, and some crazy numbers that like 15% of people in Southeast Asia have air conditioning. And you think about if they have an explosion of the middle class the way it looks like they will in the next decade, and a lot of people are going to want air conditioning. It's not exactly cold in Southeast Asia, and just that alone requires unbelievable amount of electricity. And the easy button for electricity is coal. And a place like Indonesia is like the biggest exporter there is for coal, so it's really easy and simple and cheap to just build a few more coal plants. And go ahead.
I hear you. Sorry to interrupt. I was going to say that when you look through, I always use the example of when you look at Japan coming out of World War II, they were, a decimated culture, and then they started to do well. And there hits a point where they get rich enough that all of a sudden, as you said, everyone gets an air conditioner, everyone gets a car, and their energy use, all of a sudden, it goes slowly higher. And then it hits a point where they get wealthy enough and it explodes higher. And the same thing happened in Korea, and I'm completely with you. I've been arguing this for a while. The same thing's going to happen in China, and I think we're just at that explosive part of the curve where all of a sudden the energy use per person explodes.
Exactly. Southeast Asia, per capita GDP has been really, ramping up. They export a lot. They're about to become a massive consumption hub, and that wealth S curve kind of starts to explode. And when that comes, I just think the demand growth for electricity there will be enough to keep coal alive, at least long enough for me to make some money on a trade here.
Now, this next chart that you have, and you've mentioned a couple of times, is the fact that coal and natural gas. So if you said if you're bullish natural gas, you have to be bullish coal. Why is that?
The biggest reason is just switching. There's a lot of flexibility built into the grid, especially in the U.S., where utilities can kind of just go with whichever one's cheaper on the margin. So if you get a spike in natural gas, you'll see a lot of switching to coal, and that will really, obviously pull down inventories and create a price spike. That will need, I think, short term it'll need a weather event to really explode, but a medium term, I think natural gas is moving higher to begin with. So it's just a natural tailwind, in my opinion.
Well, let's talk about that, because I'm a long frustrated natural gas bull, and I take it you are too by the sounds of things. Why do you think it's headed higher?
It's just simple, supply and demand. I think so I've been bullish since March of 2020, essentially whenever the Saudis started the price war. It was just kind of obvious that was going to hurt shale, and the associated gas production from shale would fall, which would, end the very long bear market in natural gas. And that has been the story so far. And despite the fact that oil's back above, around 60, we have seen a lot of discipline from the shale space so far. In my opinion, rig counts and U.S. oil production have stayed pretty low, considering the amount of cash flow that you could go out and grab right now if you're a shale producer. So I think that shale stays pretty beaten down, and they limit production and kind of focus on cash flow in the next at least couple year at least.
Right.
But a lot of the biggest natural gas plays, it looks like, they've kind of peaked out and they're going to kind of roll over, especially up in the Appalachian region, where I don't think it's consensus that they've peaked, but from a lot of the stuff I've looked at, I think it's very possible that production there has peaked. So if that's true, you just have a natural, just based on decline rates, tailwind for gas going forward.
So the end of the day, it's the discipline of the natural gas producers to not go out and drill a bunch of wells or whatever, go out and frack the shit out of everything. Is
Yes.
why you think that there's not going to be a supply response to higher prices.
Correct, but I will add to that exports. If you look at U.S. exports, and before long you'll start seeing it in Canada as well, but Asian demand for LNG is huge.
No, we won't see it here because we don't let ours have pipelines to the coast.
You guys are slowly building some LNG export infrastructure, but you're right.
Slow.
That's exactly that. We wouldn't want to be actually selling something at a world price when we can give it to you for half price.
Yeah, I do think that arbitrage of kind of the regional LNG differences will close. You look at U.S. LNG exports; they're huge. They're flying higher. Exports to Mexico have jumped a lot. So that I don't really see
if it does get arbed out, it'll be from you guys and not us. That's all I know for sure for that.
You guys will probably show up right at the end, yeah. Some of my favorite gas plays are in Canada, though.
Okay, so why don't we talk about that? Well, listen, why don't we finish coal and then we'll go to the gas plays. Your next chart here is this coal. Let's just finish this story here, and it's coal versus the ISM. So what do you what are you showing there?
So that's not exactly a great proxy for growth, but I was just trying to show hey, the kind of the rate of change of what's happening in the U.S. economy exploding higher, like it does have some natural correlation to coal. Really, it's better to look at kind of global growth in general. But again, global growth is just flying higher. We're going to put in 6-7% this year. U.S. growth would be probably 8-9%. So that just naturally, obviously, is good for coal.
You're just showing that coal follows growth, and then that
exactly
right. Okay, and then the final chart here is the stock, and I take it this is your darling. This is what you've fallen in love with, and I'm not a technician. We leave that dark art to the master himself, but it does look like it's bumping up its head there and wants to take off. Wouldn't you say?
Absolutely. So this is my favorite kind of pattern. It's something that has been absolutely crushed, and then it goes sideways for a couple of years.
So we should tell everyone what it is because some people aren't watching it. Sure. So this is, go ahead.
It's Peabody Energy, BTU. And I'm a macro guy, which means don't ask me too many questions about single stock stuff because I don't know. But I do like the chart. It's basically been basing perfectly sideways for 2 years, and it's one of those ascending triangles where you have a horizontal line on top, and whenever that horizontal line goes, they tend to go in dramatic fashion. So it's something where you go from $3-4 to, in my opinion, 10 without a problem.
Why don't we get the dark art master?
Yeah, let's get Patrick.
Well, I mean, first of all, some fundamentals. I mean, Peabody.
Patrick, you're not supposed to do fundamentals, buddy.
But they were on the verge of bankruptcy at one point, right? I mean, I think the credit default swaps were like pretty high up in terms of.
That's bullish in this market, though.
Yeah, that is like and if they're losing money at a fast enough rate for people to be bullish it, and so but it's been turning around. I mean, you're looking at a weekly chart, so I mean that's a pretty big picture. That's actually, why don't we actually look at some of these? Like I have a small list of them here. Like Peabody's an interesting one for sure off of that low. And if it breaks out, but then there was like, Cuppy's always talked about this Alliance Resource Partners as well, which obviously got hammered on the downside, has really come off of the lows from like $2 to $6 and has been consolidating. And then who's our Canadian hedge fund buddy that was talking about Warrior Met Coal? Who was that?
I don't know. That must have been on the show you were cheating on me with.
No. It was he was on our show. Anyway, but Warrior Met Coal is like metallurgic coal. It's also like at a really interesting point. I mean, it certainly had a big run on the upside and has been giving it back. You got the Arch Resources, and look, they're all beaten down. They've all been murdered, right? And they're all turning up.
Go down 2 more there to HNRG. That's actually my favorite.
Yeah, is it?
I like the chart a little better on BTU, but HNRG is my favorite play.
Yeah, that's and so HNRG, like that thing went from like 10. Where the heck did it come from? Hold on.
So while you're
back-
doing that and getting that, Patrick, I pulled up the 5-year credit default swap for Peabody.
Right.
And you're right. It had a little sketchy moment there for a little while in November. It had a 30% chance of default over the next 5 years. It is now down to 10%, though.
There you go.
So
But
yeah.
Yeah, so like at its worst, I mean, it was being priced. I mean, to be priced at 30%, that's for a 1 year, probably a 1 year bankruptcy, right?
No, 5-year, I believe.
Oh,
Oh, no,
that's
wait. Oh, no, you're right. Actually, you're right. 1 year default probability. It's still 9%.
Yeah.
I like
But
my
anyway,
odds.
but hey, you know what? The market loves that shit right now, so that's probably a good sign. But anyway,
It just needs to go 1 more year. Okay, so those.
anyway,
are your,
but
so
they're
the,
beaten up. They're for sure. But what's interesting though, I mean, they certainly all had like earnings in the last few days. Like Peabody kind of gapped a little bit down on the earnings just the other day. So like, I mean, they're and like even like ARLP disappointed disappointed on its earnings, been selling off. The Warrior Met Coal got its face ripped off back on its earnings back in February. And so, like, I mean, it's a very early stage. These things aren't taking off. The bus hasn't left the station yet. Right. And there's opportunity to pick up some of this stuff pretty cheap, even though you're not getting it at the cheapest levels. There's still some upside here.
So, Patrick, some of our listeners accuse me of actually making fun of the dark arts, but then practicing it. I'm going to, flip that on you, saying I asked you for a dark art opinion, and then you gave me fundamentals and started talking about earnings. Good for you. I'm glad to see you actually look at those things and those matter. Okay, Chase, let's get back to the guest. Let's talk about natural gas. What are the names you like? Let's go through them and tell us why you like the different ones.
Sure. So the way I've actually constructed my natural gas basket is sort of like 50-50 between the U.S. and Canada. I think most people own EQT that are in the space. It's the biggest U.S. producer. I like it. But tourmaline there in Canada, TOU, is a favorite of mine. And I'll let you guys pull up. Yep. There you go.
That's a good looking chart.
Yeah.
Jeez, it just keeps chugging higher.
Oh yeah, they all fired up off of those March lows that happened during COVID, and they just haven't looked back.
And that was I learned a lesson this year. Like I was fortunate enough to kind of just buy the absolute bottom in all these natural gas names this year, and when you actually are able to catch something that's just beaten down near its bottom, it just gives you so much more flexibility to like take pain later in the cycle. And I noticed that a lot of my clients, ignored me whenever I said I was buying it. And then, 4 or 5 months later, they started to buy. And then, there was kind of a nasty 30% drawdown and they all puked. And I'm just sitting there like, I'm still up a lot. Like, I don't know what your problem is. And that really shows, that really showed me. And trust me, it's probably the only bottom I have ever will buy. But it really gave.
Well, I mean, sorry, you are buying Peabody.
You're buying Peabody. Maybe you're more of a bottom catcher than you think.
Well, I definitely am. Like, obviously, I'm buying coal. So,
okay, TOU. What else do you like? What other names do you like?
Sure, SRX, another Canadian name.
Storm Resources.
I never heard of it.
I hadn't either.
Doing great. PEY is another favorite.
Oh, that's a famous one.
The
There you go.
Oh, actually, there you go. This looks
that
actually
one's kind of a flag.
Yeah, the bull flag attempting to break out. Well, there you go. This is one of the few that it looks like you can catch it right at the start of a new breakout.
Absolutely.
Okay, what else? You got more names?
I'll give you one more. BIR, another Canadian name.
Oh, Birchcliff.
Yep, there you go. He knows this one. And
Hair on the back of your neck just
an SD in the U.S.
This one is the Birchcliff is famous because one of Canada's richest billionaires used to own just gobs of this thing, and he ripped his face off on it. And he bought it and hung in there, and then did he puke it out at the lows? I can't remember, Patrick. Do you remember?
No.
Anyways, he was very famous, great investor that did terrific in gold, but he didn't do so well on this.
Do you ever track Ovintiv? That one,
but that's not even a gas stock anymore. I don't think, though, Patrick.
Well, I mean, it still has gas exposure.
It's not a pure one.
Yeah, it's not pure. No, it's another one that was we talked about on the show before was Range Resources, right? That's another one of these nat gas stocks that's been working half decent. I mean, there's so many.
U.S. name.
Which
There
one?
you go.
SWN Southwestern is another U.S. name.
Yeah,
it's pretty
actually,
good.
we should do more U.S. ones because a lot of them will be like,
Yeah.
"What are you talking about? These stupid Canadian ones? I can't trade that." It's on the pink sheets.
There you go.
It's got the F at the end of it. Don't you hate
Yeah.
that when you go find some Canadian name and you go to trade it on the pink sheets, Chase, and you got to trade it with the F at the end?
I try not to.
Do you have an account you can actually trade the account directly, like in Canada?
Yeah.
Okay, good.
Yeah,
'Cause, that's
I try to. When I see more than 4 letters, I just try to stay away.
That's a good.
That's a good rule of thumb.
In general. Bad news. Okay, so you mentioned that you like all things energy, and we have to talk some uranium. It's getting off the map, but it's probably been a disappointment, wouldn't you say, for a lot of the uranium bulls? And I was wondering what you think.
I mean, to me, no. But if you just look at like URN's
it hasn't been a
charts
disappointment?
for the last 2 years, it's been explosive. And I think,
Yeah. I mean, this is let's start with the actual
week.
uranium price. Yeah, so this is the uranium participation unit itself, right? So obviously it's I think it's still trading a little bit at a premium, is it not, Kev?
Well, this one's actually pretty wild because, Chase, do you know the story about what's happened to the ownership of this uranium?
No, what happened?
Well, I'll let Chase. If he knows it, let him tell it. But do you know, Chase?
Are you talking about the Sprott move?
Yeah.
Yeah,
Yeah, absolutely.
Right.
Yeah.
So Sprott's.
I think it's gonna be a big deal.
Sprott's gone. Yeah. So why don't you tell us why?
No, so Sprott's going to be in the physical ETF space now, and they're going to be able to basically sell shares like anytime they need to go and buy a physical. So these these wide premiums and discounts to NAV are essentially going to become a thing in the past, and it's just it allows those bigger players that want some liquidity and don't want to have to deal with those big discounts and premiums to essentially buy a spot, right where they want to buy it and be able to go and instantly actually get that physical. So I just think it'll add a lot of liquidity, and if you start getting enough money in, I think all the excess inventories out there in the spot market are going to be gone fast, and that should push utilities into another contracting cycle, maybe a little sooner than they would have.
Okay, and so they're going to do. So Sprott went and bought the management company of uranium participation units, and they're going to do what they call an at-the-market deal, meaning that anytime it trades at a premium, they're going to be able to just sell it out on the board, like just bang, sell it, and then go buy the premium, the underlying. Is it a commodity? I don't know what you call it. The question I have for you, though, Chase, do you know that explains to me that it'll never go to a premium, or the premium will be always very minor. They're not going to go and buy back their shares, though, if it goes to a discount, are they?
No, I don't think so.
Yeah, because it makes no sense for them. They're just going to expand it. So, yes, you're right that it's going to make it so that you can buy with more ease and that it's not going to go to a 20 or 30% discount, and there's going to be less kind of volatility of the premium. But it hasn't eliminated. It's not going to be like an ETF where it's going to trade bang on, but it's going to become closer.
Close-ended.
Yeah, it's still a closed-end fund.
Yeah, but you're right though that's going to if that attracts more investors that are willing to own it for the long haul, it helps clear up the supply glut that's been on the market for a long time.
Yeah, and it's going to be interesting too, because in uranium, it's so opaque, especially for the spot market. From what I can tell, no one has any like really good idea of how much uranium spot, in the spot market there is out there. So I remember Cameco, like even a year ago was talking about how like it wasn't that easy to go out and buy in the spot market. And I know obviously some of the smaller miners have gone out and been buying physical lately. And I think Denison had to like do a bunch of different transactions with different people to source all the uranium they wanted. At least the rumor was that. So if that's true, then the spot's already starting to get a little bit tight, even though price, we're at like 30.29 now on spot, which isn't that great. But
so it cleans up and it's getting tighter, and then it has the the next move up to 60, which is where like the long term contracts are.
And I think contracting is going to be more like 70.
So given that,
anyways.
would you own? Oh, you do.
Oh, what was that? What'd you say?
I'm sorry, you said contracting is going to be more like 70. Is it so? You anticipate it going up on that side as well?
Yeah, absolutely. I think whenever the long-term contracting like cycle hits, it's not going to be anywhere near current spot price. There's just no reason for anyone to go get pounds out of the ground at $30.
Right. And so given this, and so let's just assume that this happens over the next year, and would you own the actual spot, or do you think that there's more juice in the stocks?
I definitely think there's more juice in the stocks. The easiest way to do is just play URNM, just because it owns a few of the miners and mostly decent ones. My favorite of the individual miners is NextGen and XE, just because they have just a really great project that's going to come online right about, in my estimate, right about the same time that we'll get the price where it needs to be. So I think they'll start producing, basically the perfect time with a very, very good mine.
So I have a buddy that's he's a younger guy, and he's the best institutional salesman I've ever met. And in that institutional salesman kind of guy, he's a terrific guy, but he's just a great salesman. And he pounds the table so hard on this thing, and he uses probably even more aggressive words than you about the world class of this property and how great it is, and it worries me a little whenever.
That's fair, because it is consensus that they have a great property.
Right. So it worries me, but this guy's had a lot of great calls, and it really does seem to be a name that has a lot of potential. Okay, let's talk a little bit about oil. Are you just as bullish on that commodity as you are on the rest of the energy complex?
I would say I'm most bullish on oil out of all of this stuff.
Oh, really?
And have been since essentially. So I was short a lot of last year during the pain, but whenever we went negative, I just started loading up on the out years. So I own a lot of like 22, 23 futures, and then plenty of the equities, and you're just getting such a nice discount. You can buy the out years like 22, 23 for just over $50, which is, to me, is crazy.
Yeah, there's huge backwardation still in that curve. There's huge backwardation, and it's still there. Like, I mean, it's up here at $63. It's really only the front 6 months that are like in the ballpark of this, and then it just starts to, you go out a couple of years, and you're flatlining down in the low 50s, right?
So why do you think that is, Chase?
So, I mean, at the end of the day, there's no reason to do any storage right now because we're still coming out of the glut. So it makes sense that the curve's not going to pay you to store anything. I think that's really the explanation. But to me, like, I just view that as an opportunity to sit there and wait 2 years out, 3 years out, and essentially collect the roll yield. So that's one of the beautiful things about oil is it's kind of obvious to me, at least, where we're headed. That we're headed a lot higher. And if you're in the equities, you're just going to get paid dividends and to wait. And then if you're in, December 23 contract, you're just essentially going to get paid the roll yield to wait. And I'm a big fan of that.
I'm with you. If you think about the people that are screaming about all the inflation that's coming and all the money printer going brrr and all the code words that they say, why wouldn't you go own a real asset that's, out a few years at a big discount? And I get it. I understand. Supposedly the world's coming off of oil and we're all going to be driving our electric cars, and there'll be unicorns and rainbows everywhere. But I just think that process is going to take way longer than people expect. And maybe I'm doing the SINRAM error as well, but I think that process is going to take way longer than people expect. And if I can buy an asset, 5 years out, because I'm looking here, the December 2027 contract is $52. So let's just think about it. If we just had, everyone's worried about 5% inflation. So 1.05 to the power of 5, what are we going to get? That's going to get, let me just do this. That's going to be 27%. So 63.49 times 1.27. So we're going to be like $80 if it just keeps up with inflation. Right?
Absolutely.
It just I'm with you. I don't understand it. I think it's people being overly optimistic about the switch from energy, and I think that before it's all through, that'll flip, and those people will be paying up for that.
Just natural decline rates globally for oil means you need to find a bunch of new oil and you need to invest a lot to find it. And we've been doing none of that for the last 5 years because the price has been down and sentiment's been down.
Well, and not only that, we've been, as investors, chastising any company that goes out and does that. You go look at all the majors, and they're spending all their money trying to come up with solar and wind farms and things like that. So there's no money going into this, and
which has been interesting because the Canadian, or not Canadian, but the European majors have really they're all in on getting away from oil and becoming battery companies or whatever, like you're talking about, and they've been absolutely punished compared to the U.S. majors because, especially Exxon, just kind of keeps saying like, yeah, we think everybody's wrong, that we're still going to need a lot of oil. So we're going to keep finding it and pumping it out. And, they're crushing, Shell or the Total and these companies from Europe.
That's shocking that an American company saying, screw it.
Yeah.
Anyways, although listen, if we need it, if there's a demand, then we're going to need it. And it'll be important for someone to make it.
So everyone just keeps pointing to peak demand. And I think whenever you focus so hard on peak demand, you're kind of guaranteeing sort of a peak supply problem. And I think that's going to play out in the next 2-3 years and I think the average person just looks at spare capacity and it looks like a big number right now because of, the year we just came out of. But I think OPEC's spare capacity is going to get chewed up pretty fast. And I think towards the end of that spare capacity, all coming online where we're still not kind of catching up to demand growth. That's going to be the part where the market kind of has an oh shit moment and realizes we need to start investing yesterday. And that's where price can get very explosive when everyone has a collective, we don't have enough of this moment.
It's going to be like a Wile E. Coyote, but instead like when he falls off, but then he's going to grab hold of that rocket on the way up and just head off to the moon. Okay, so you went through your energy thesis. One of the things is that a lot of your kind of theories are based upon explosive growth throughout the world. Why don't you tell us what the basis is for that optimism?
So I'll kind of focus on the U.S. because it's the most interesting part of that to me. Coming into this year, to me, it was super clear we're going to have just an enormous boom because of the fiscal situation. And we are having that and the fact that vaccinations were going to go fast. Something that happened with COVID that was really weird to me and created a huge opportunity for anyone kind of paying attention was everyone in the markets was paying attention to the herd immunity number at 75%. But that was like a medical definition of herd immunity. That had nothing to do with the economy or the markets. Yet, despite that, the markets cared about the 75% number. Whereas if you kind of looked at what would keep people out of the hospital, that number was significantly lower. I figured it was about 40% based on some napkin math that I won't get into. So whenever I kind of did the math on how long it would take to get to that 40% number where no one needed to go to the hospital, like hospitals weren't overflowing, that's when it was clear everyone would open back up. So while everyone else is waiting for 75%, to me, it was time to get aggressive whenever that 40% was in sight. So that's what I did. And I think, growth is exploding. To me, the biggest story in the economy in the US is just households. If you just look at household balance sheets, where households are with savings, with income, with disposable income. I mean, these things are all at generational, points. And I know like all of our hard money friends are like, yeah, but it was all just, just a government, just spend-a-palooza. Like, sure, but I don't care how it got there. All I know is that regular people have a bunch of money in their bank account, and that matters. That's going to lead to a lot of spending, a lot of demand, and that can even become self-fulfilling for a time, especially if we keep getting more and more fiscal stimulus, and especially if that stimulus keeps making its way to, call it, the bottom quartile of the economy, which it has in the last year. So if that all keeps playing out that way, we're going to have explosive growth and we're going to have explosive demand. And naturally, that's going to lead to significant energy demand, which is going to propel all these energy markets.
So, Jace, I'm still laughing at your spend-a-palooza. I can just see Peter Schiff like pulling out his hair, like
oh, yeah.
like all
For
the
sure.
hard money guys going spend-a-palooza. It's going to end badly. Yeah, maybe it does, but in the meantime, things are going to get a lot hotter, as you pointed out. Chase, it's been a pleasure having you on the show. Why don't you tell people more about your letter and where they can find you?
Sure. So, I actually took your lead and started a Substack.
Oh, you did?
Okay. So I did. So I actually put part of my weekly letter on that. I actually have two of those. I have a free one, I have a cheap one, and then I have my regular weekly letter and my monthly letter. You can find all those at pineconemacro.com. You can follow me on Twitter at Pinecone Macro, and everyone's welcome to shoot me an email, and I'll send them some free samples of my work.
Okay, well, what's your email?
Awesome.
And people
Sure.
should take you up on that, because if you want to see some of this great stuff and get that to kind of see all the great calls that Chase has made, why don't you take him up on his offer and send him an email and ask for some past samples? Go ahead with your email.
Sure, hit me up at chase@pineconemacro.com.
Yeah, I think you might have. I'm not sure if you blipped out there, but I'll just repeat it one last time. Chase@pineconemacro.com. Now, before we let you go, I think last time that you appeared on the show, you were a new dad, and it's now your daughter is how old now?
10 months.
10 months. So you're well through the 100 days of hell, which is what I think the first 100 days is. And I just want to know, how is life treating you as a new dad?
It's definitely been great. We drove from the West Coast to the East Coast, and she was not a huge fan of being strapped to her car seat for that. But
Bold move.
yeah, but it's been wonderful. It's a blast watching her grow up.
Well, that's terrific. That's awesome. And why don't you just would you mind telling people where you've moved to?
Sure. I'm in Northern Virginia, a little bit outside of DC, and came from the northern reaches of Los Angeles County, which was not the best, in the middle of the Mojave.
And now, are you going to go? If I'm not mistaken, that's not that far from the Outer Banks. Have you got yourself a place booked for the summer on the beach?
Not yet, but we are hoping to get down there.
Yeah, no, I'm a big windsurfer, and many years I used to go, and I just love it. It's a terrific spot. It's beautiful. It's probably one of the most underrated beach communities in the U.S., in my opinion.
Well, now I definitely have to go.
Oh, for sure.
But we have some friends in North Carolina, so it's going to be on the list.
Yeah, and it's great. And you know what's awesome is while you're driving through, you're going to drive through where all the big ships are. Now you were close to. Did you ever go to San Diego and see the ships there, like the warships?
Yes.
But,
Yeah.
okay, so this will be not that impressive for you. But for us Canadians, we don't have big ships like that. It's always pretty impressive when you see them out there, and it's a little bit of eye-opening. Anyways, Chase, it was a pleasure having you on. Really, thank you for coming on and giving us these great ideas.
Thanks, Chase.
Absolutely. Appreciate you guys having me.
Okay, Patrick, time for talking charts. What was it like? Did Dumbledore help you out?
Yeah, absolutely. It was a great lesson. All right, but let's start off by talking about the top 3 things we were watching last week. We started off actually watching that U.S. dollar CAD or CAD US. It doesn't matter which way you put it. Bottom line, Canadian dollar took off.
Just screaming.
Did we pick one right for once? Like, I mean, once a month we get one of them.
Well, that was yours, so you deserve all the credit for that. That was something to watch. New highs. Canadians are feeling richer.
Except they are all holding their assets in U.S. dollars.
Yeah, that's right. Canadians would be feeling richer, except everyone's stuffed to the gills with U.S. stocks.
There you go. But you know what? It's interesting. It's approaching this 81.5 to 82 cent level. I think that's going to stall it out here. So really, the trade already happened, but it was quite the move. So we were right on the ball on that one. Number 2, we were talking about that capital gains tax increase. What happened?
It just ended up being a big nothing burger. Nobody cares. Yeah. Nobody cares. It's not, for those who are getting out and saying that this is a reason to sell stocks, it doesn't seem to matter.
And number 1, we wanted to talk about copper, or we did talk about copper, and well, it did continue, right? I mean, today we had a little bit of stalling in the price action, but it just kept plugging along.
It's doomed. It's doomed because I got back in. I couldn't take it anymore, so I had.
Okay, but did you buy the high? Are you like
no, I didn't buy the high, but
okay.
Geez, I'm probably not that far off. It's doomed. Both of us are long, and I got back in, so we're done.
Actually, I'm not long. I'm not long the metal, but I do have a few copper miners that are.
So you're telling me there's a chance?
There's a chance, bud.
Okay.
I still think a move up towards 475 is possible in there. All right, so let's talk about the top 3 things to watch next week. And the first thing I wanted to start with those 10-year break evens, right? And so when we're looking at inflation expectations in the market, obviously the fact that so many commodities were rallying, it certainly created some transitory inflation, and we had a breakout here on the 10-year break evens. Do you think that this is a legit breakout in your mind?
Well, I'm a little scared because you know me, I've been long these things forever. It's my biggest holding, but long break evens. And now that you're figured it out and actually charting,
I'm not in. I'm not in though.
Okay, well, I might have a chance. I don't trade them technically. These are truly my one buy and hold, and so I don't even look at them. And I know that sounds insane, but that's how much I believe in.
So your stop loss is I don't look at them.
Exactly. It's very. We can write scientific.
So it's are you a hodler or what do they call it?
Yes, that's right, a hodler. I don't know how you say it. I'm hodling my break evens. You're absolutely right. Diamond hands. I got bloody diamond hands when it comes to these. And I do have diamond hands when it comes to these because I sat through the March COVID disaster on them. And, oh, God, Patrick, they were so ugly. Like that chart there on the 10-year. Let's just go have a look at it. I know you can't pull it up, but it's right now. Let me just pull this up. Break even. Stay with me for 1 second. It's trading at 244. It's a breakout. And it feels great, but I'll tell you what it traded at in the March COVID crisis. 49.5 basis points.
Jesus.
It was pretty ugly there.
That's
for
like
a while.
4 or 5 fold.
So I remember the day. There was a day I was in. I have 30 years, and I had some 10s too, but I'm longer. But I remember there was a day that I was long all these tips in my inventory. And then I was short all these futures because that's how you put on the break evens. Yeah. So I'm short the bond futures and I'm long all the tips. And there's literally no bids. And that's what happened. Like there's no bids. And then the bonds go screaming straight up. And I needed the diamond hands that day, I'll tell you. And I needed like new pants because it was ugly. Okay, number 2, what are we watching?
Number 2, the big tech earning reactions. Most of the big tech has already reported, but what was interesting particularly was the pop and drop in Apple and even Microsoft's little reversal. And I thought this was really interesting because obviously, number 1, during that entire January to March period, the tech names were just trading like shit. And whether sideways like Amazon or downwards like Apple, I mean, Google held up. There's a few of them that were really solid. But then once yields bottomed and the kind of reflation trade took a pause, all of these FANG stocks reacted. And so last month has seen most FANG stocks do relatively well outside of like the gap lower in like Netflix and shit like that. And so we just had their earnings and Apple prairie dogged it.
Prairie dogged it.
It
really
did.
That's a classic prairie dog.
That's and I prefer prairie dogs that happen over 1 or 2 days, not like you've like even this prairie dog back on its last earnings, it lasted 3-4 days, but that's perfect. Like you want something that where it just pops for a day or two and then the sellers just give it to them.
It just depends on how confident the prairie dog's feeling.
Yes.
So
yes.
back in February or January, it got out of its burrow and it poked its head and it stayed there for a little while and checked
just
it out.
kept staring. Just kept staring.
But this one, it poked its head and said, I don't want anything about that, and it went
then,
right back down.
Exactly.
Yeah.
And so the question is that now triggered a new distribution cycle in a stock like Apple? And, you look at the way Microsoft didn't, no prairie dog here. It just gapped lower and just kept puking. Well, it's not really that bad, but I mean, it certainly has been selling on the downside, but certainly some key reversals there. You look at NVIDIA, it prairie dogged as well, right? Like it at least poked to a higher high, looked like it was ready to go, and it's been consolidating since. We do have to give some lip service to the ones that have been working, like Facebook did the screaming gap higher, and it's a very bullish looking chart. Like, I mean, this measures to like 340, 350 on the upside. And so, and Google has been just one of the strongest of it has been the strongest of the FANG stocks. It's just during that entire February-March period, it didn't even go down. It just traded sideways. So that's been one of the stronger ones. And then, of course, Netflix had that ugly gap lower and is trading at the bottom end of its range. And then, of course, we want to touch on Amazon, which is this a prairie dog, right? Like it tried to break higher on its earnings, but red candles coming in, which is that it's meeting selling right along its previous highs. And so one of the questions I just wanted to ask is, are we going to see that, like, especially if it's like Amazon, Apple, and Microsoft, they're the real big mega caps. If they turn around and are faded off of their earnings, like that should have been a tailwind for the stock market. Will that be now a headwind for it? That's something I'm watching. That's number 2 anyway. Do you have anything you want to add to that?
The only thing I realized is that we no longer refer to the prairie dog as a noble animal, and I want to bring that back. So every time we say it, we got to say it's a noble animal.
It is. You know what? You know how much money I've made off the prairie dog? It is a noble animal.
And when you go to the Winnipeg Zoo, it's by far the best exhibit. You just watch, like, there's 50 of them in there, and they just, like, they're awesome. I actually think that every zoo should have a prairie dog exhibit. Number 1, what do we got?
The jobs numbers, bud.
Oh, yeah, that is important.
Yeah.
And I don't really have anything to add.
Other than it's important. It's important.
I do think that one of the things I will highlight, Patrick, is that I believe that people will start to see jobs showing up in terms of the unemployment rate going down, and people will freak out and think that the Fed will be tightening on that. And I think this is a different Fed, and that's something I just want to keep hammering in there. This is a different Fed. They're not going to tighten just because a few jobs are created. They're going to look a longer term. But that's a story for another day.
All right.
But watch it for it. It's on Friday.
There you go. So let's just talk a few extra charts and just kind of go and see what was going on. Well, we'll stay at higher level kind of charts to just see what's happening. The S&P, obviously, the first reaction in the post FOMC meeting was a pop higher, but the bulls are having a hard time holding the post FOMC gains. It's still a very clean uptrend. It's still higher highs, higher lows. Like there is, I don't want to already say something outright bearish, but the only thing we can really say is they haven't held the initial rally. And so it'll be really interesting to see whether we see divergent momentum. And so what often near topping formations, you start seeing what's known as like a rising wedge, which is essentially it continues to progress higher, but loses all momentum in its rise. And it just and often that is the final stages, and then some news catalyst inevitably is enough to tilt the supply demand, and then the selling cycle begins. It'll be interesting to see whether we just have that dead crawl higher on the S&P and that the momentum is gone. That's one of the things that I think is going to be really important to watch on that over the next couple of weeks. You have anything you want to add on that?
No, I just got to say I now know what a rising wedge is, and you drew it so nicely. It's good. I'm learning. Keep it going.
There you go. So the NASDAQ has not been able to, like that. There's no rising wedge here. I mean, it did pop to a higher high. Now, this is one aggressive prairie dog if it ends up being one. Like it just popped its head above and it's just hanging on. It's hanging on. No, but I'm all kidding aside. Like it really, we had a break to a higher high. And then it just has not been able to follow through. And obviously, in this NASDAQ 100, those behemoths, so Microsoft, Amazon, and Apple are just so big. They weigh so much into that index that if they start to sell, this is not going to hold up. I mean, I think this is the fate of the NASDAQ is in the hands of those three stocks, and we'll see. Because, like, I mean, really, in my mind, Facebook and Google have already contributed to the upside. They're already overextended a bit. I'm not trying to say that they're going to turn, but it really is going to come down to the direction of those three behemoths that is going to really drive whether or not the NASDAQ is an underperforming sector or part of the market versus that of the broader market, right? And the other part that I wanted to touch on was VIX, right? So the volatility index, very low. It's obviously the realized volatility has been incredibly low, dragging this down. But one of the interesting things to me is, are we going to see at some point volatility pop back down up into that trade range that we saw from August through to March, where that kind of 20 to 25 range is the bottom end of the range? Like, are we going to return back in there, or is this a new sustained lower level of volatility? You sort of think that this volatility cycle has played out a bit, haven't you?
In terms of on the long side, like
no, like just that at the bottom, that it's not going to go much lower.
I think you're too bullish on volatility.
Well, but you're not bearish on it, are you? Are you a seller of vol?
Side, I would definitely choose the short side.
Really? Oh, wow. But maybe we have a bet here somewhere coming up. This is interesting. All right, well,
one to do the bet there, buddy.
Yeah. Did you just say that?
I know.
Because
I'm gonna lose the next one.
You know, sure. But do you realize, like, you? Okay, wait. Okay, all right. I'm not going to say anything else.
I'm tied it up. I'm just tied, so I got to be careful.
Right.
I completely agree. You just kind of walked into it.
I did. You just
you put the fat pitch out there, and I had to hit it. I'm sorry.
All right, let's talk the dollar. Look at that candle on the Dixie. That dollar index, we saw sustained.
You get excited every time you see a big green candle on the Dixie. You're just like, whoa, it's going. This is it.
Hey, look. One day doesn't make a new trend, but often this is how things start, buddy.
I guess.
Like, listen,
if you going to start that way.
If you want to get in at the beginning of a move, you got to take a risk early on before the trend gets underway, right? Like it's look at the way off of that bottom when they started to break off the lows. Like you know, if you didn't get in right down there, then you missed it.
Yeah, well, there you go.
Right? Like, anyway, I just thought it was a really interesting update today. But the level to really watch is around 92, 92.5, because the dollar was so oversold that just a reflexive bounce on the upside would be par for the course. What it really is like if the think of the way it behaved back in October. So after a good bout of selling here, there was this little snap that lasted about 5 days, and that got up to about 94. And once that very kind of oversold condition snapped higher, if the bulls weren't going to follow through, the sellers just gave it to them. And I think it's going to be a very similar situation around 92, 92.5, which is, that's where we're going to find out whether this is a real turn in the dollar or whether this is just a bounce and that to sell into. And I think the real story will be, we should have had it probably in the top three, because next week watching a dollar bounce into the 92 is something that's going to be pretty high on my watch list.
So, Patrick, you did try to put it in the top threes, but you always try to put it in the top threes. So
and then every time you kibosh me,
I was like, we can't keep it. Number one, we got to watch the dollar. Number one, we got to watch the dollar. We get it. All right. We got to watch the dollar.
Oh, we get it. All right. So just touching on the U.S. dollar yen. And this is if the U.S. dollar bounces, this is where I think we could see it. Like, is the Canadian dollar move already kind of played out in some degree or another. But like watching whether the U.S. dollar can really grab on and run with against the yen, maybe back to 111 for a retest of the high, or maybe even up to 112. Like around 112 on the U.S. dollar yen are all those kind of COVID period highs, right? And that would be a very interesting level to kind of for the U.S. dollar yen to go and test if it was to punch past that previous high. And so it will be interesting to see whether that this forex pairing gets a little momentum here. The other than that, what was interesting, I wanted to touch on crude. And what was interesting is we got yesterday a breakout just in time for me on that other podcast I'm on to go and start talking about this big breakout. And then today, the entire thing is given right back.
And not only that, I'm sure your other host, he's always bearish. So like, I'm sure he was like,
no,
he's bullish.
No. Yeah.
Oh, I'm giving away that I haven't listened. It's
but
okay.
I don't read your letters, so it doesn't matter.
You just look at the pictures, like
just
most
exactly.
of my subscribers.
All right. So the nat gas actually, I want to look though actually on not on the continuous contract. We got to go look at the June or July contract, because what's interesting is nat gas found a pretty big support line along that kind of 250 level, just for rounding purposes, we'll call it that. And we're gravitating right to the top of the range. It's like a ping pong match between two support levels. And you know, the interesting part here is that the rolling up the term structure from a seasonality perspective is really a late third into fourth quarter story. And here we are, it's still April going into May. And I just don't know whether nat gas, this is the right part of the year to be looking for a bigger breakout above these previous highs. I'm wondering whether we reject off of the previous highs here, and that the bigger kind of more bullish nat gas move reserves itself later into the summer. Do you have any opinion on that? Am I just...
you know, I'm always... you can't ask me about nat gas because I'm, you know...
Yeah, but you're along the strip, whatever.
Yeah, and I'm just an idiot. I just, like, it's kind of my... it's like the dollar for you. I just end up always wanting to be long. So I have nothing to add except that I hope you're right and then it goes higher.
So let's talk gold. And so gold approached a pretty critical line. I usually don't throw moving averages on there, but where the 50 and 200-day moving averages are in gold is really interesting. The 1800 level has been like where all the previous lows occurred, and now it's an overhead resistance. And as we approached it, it was a natural thing for gold to go through some sort of a consolidation, some backfill. We could even arguably go 1750, 17 and a quarter, and it would be just a typical retracement of a move. But what will be the most interesting in the weeks and months to come is, will the gold bulls be able to punch 1800? And that's really where it's going to flash on the radar of a whole bunch of technicians that anchor off 200-day moving averages. Even Paul Tudor Jones talks about that 200-day moving average. Yeah. And so, like, gold getting above 1800, I think, is going to be a huge psychological thing that will put gold back in play for a lot of traders if it can get above. I don't want to say it is. I'm bullish it, but like it hasn't done it yet. But that's certainly something that I think is worth watching into next week. Anyway, that's what I wanted. Is there a last chart you wanted to talk about or anything?
That's good stuff. I hope the market gods are listening about you on gold and that we finally get above it.
There you go. All right.
Okay, Patrick, time for This Week in Trading History. What do you have for us?
This week, it was April 29th of 1863 when William Randolph Hearst was born. And he was one of the founders of the American media industry. In 1887, young Billy Buster, they called him, just out of Harvard, takes over as editor of the newspaper called the San Francisco Examiner, which his father had recently acquired as a settlement for a gambling debt.
Nothing like winning a newspaper as a gambler.
Winning a newspaper, and then your dad wins. Your dad wins the newspaper and says, "Son, you just you finished Harvard. Why don't you take over as editor of this?"
I won this thing in a poker game.
But by the turn of the century, Hearst was one of the world's most powerful press barons, and was the model of the Orson Welles Citizen Kane.
Oh.
And so it was 1898 when, just some little further history, when Hearst championed the Cuban rebels and welcomed the U.S. declaration of war against Spain. And at the height of the crisis, more than 1 million copies of his journal were sold each day. So he wanted to lead the Democratic Party to the White House. They had endorsed, but the problem was he endorsed a political assassination as a mental exercise when he printed a poem that joked about the death of a president. But then when William McKinley, the 25th president, was assassinated by an anarchist in 1901, Hearst was actually blamed for it, for publishing that stuff. So nonetheless, he twice was elected to the House of Representatives from New York and won 40% of the votes for a presidential nomination on one ballot at the Democratic National Convention in 1904. He lost a couple contests to become mayor of New York and governor of the state by narrow margins. But Hearst ultimately failed, both as an entrepreneur and a leader. He overspent all of his fortune, and in the 1920s spent recklessly on art and real estate. But by 1937, he lost control of his holdings during the Great Depression. And of the 42 papers he had bought, or established, 17 remained by 1940. But today, the Hearst communication's still around, right? A number of magazines, television stations, still San Francisco Chronicle, the Houston Chronicle, the Cosmopolitan, Esquire, A&E Networks, originally the ESPN, which is now was in partnership with Walt Disney now, but still Hearst's empire is still muddling around.
That's awesome. Actually, I was Googling some stuff as you were talking there, and I didn't realize his father was a mining engineer, and he developed the original Homestake mine in the 1870s. You got to do him on one of these days on in This Week in History.
Yeah, and he also had a role in government as well back then. But anyway, one of the great barons and the original Citizen Kane.
Awesome. Well, thanks for sharing that with us today, Patrick.
But it's time, Kevin, for skin in the game.
Yeah,
I threw you one that was 50-50 and you picked right.
Yeah.
I mean, eventually, if you flip the coin enough times, you were going to be right one of them.
Well, one of our listeners highlighted the fact that I did not pony up and bet big was going to mean I was going to win. And he was a bang on correct. Spot on analysis. Obviously, a Market Huddle listener knows how it works, knows how the game works. When you sheepishly, after getting hammered, just pick a low wager, you're going to win that one. And then when you go stick your neck out.
That's just like the markets. You go big, get your face ripped off. So you go and throw a small trade in on something that could have made you your money back, and you go too light.
Patrick, it took me many years to figure out that if you had asked me my favorite best trade at the beginning of every year, it rarely would it ever be what actually made me the most money. And in fact, often it ended up being my biggest headache because I traded it too big.
Yep. Well, listen, you're saving those pearls of nuggets of knowledge. We'll save it. We'll share that later on in the show, maybe, or something. All right. Anyway, listen. Let's talk about the bet. We're doing that June futures contract. We were talking about the close above or below 62.14 on crude oil, and we closed 63.49. I mean, it looked like yesterday you were running away with it, and then when crude oil started selling today, I was like, "Oh, come on, baby, you can go." But anyway.
Not enough. Plus, I sat there and bought all the crude oil I needed to keep it up. No, I'm just kidding. Okay, so let me tell everyone about our game. It's called Skin in the Game. It's our weekly opportunity for us to demonstrate that we are degenerate gamblers at heart. Every week, one of us presents a wager, and the other guy chooses which side of the bet he wants. Every wager needs to settle by the next episode, and the currency for the wagers is as follows. A Duke and Duke, which is a crisp $1 American bill. A pint of beer, a burger bet, a pitcher, a case of beer, 2 for, a bottle of wine, not a box, and a steak dinner. The winner of the bet is obligated to create a new bet for the following week. So that's me, and all wagers settle in full, and there will be no nettings of the positions. There is no offset.
Physical delivery, settlement in full.
And most of it will be paid, drunk at the Market Huddle piss up when we finally exit lockdown.
Set up those beers. That's exactly right.
Okay.
All right. So what's the bet, buddy?
Okay.
You're
I
up.
was thinking about a lot of different ones, and I got to do the end because I think I think that you're vulnerable there. And I was I don't know if I want to do a one touch or if I want to just go up or down. I know you like the up or downs. It kind of it's nice, but the one touch.
No. Listen, you got to. No, listen. You got to change it up. Don't.
Okay. So here's the deal. Okay, so you think it's going up because I know you.
Oh, you think so? Okay,
Yeah.
Go for it.
So I'm gonna say one touch next week. 111 even. One touch.
You know what? You're too bullish for 1 week. I'm taking the down on that.
Shit. Okay.
You went too high.
Yeah.
If you said 110.50, I would have probably.
Well, do you want to do it? I'll change it.
No. I'm
we can
not more
change
than
it. It's negotiation. I showed you my bid and you took it, but you know what? If you want,
yeah, but now you're gonna take me. Okay, all right. You one touch 110.50. Done.
Okay,
so I'll take the long side.
You're taking that I'll touch it. Okay,
I'll
done.
take the touch.
Awesome.
All right.
Okay, what are we doing? I think we just got to stick with pitchers. We need a lot of pitchers for our piss up.
Yeah, I don't feel that confident about this trade
so let's
that I'm going to go to
the standard bet.
A pitcher of beer for the piss up.
Yeah. Okay. So all Lena, it's 110.50. Patrick thinks it touches that. We're going to go with the Bloomberg quote.
Done.
Okay, and yeah,
done.
That's it.
So if TradingView doesn't print it and Bloomberg does, then you
win.
All right.
Yeah.
Done.
Okay.
All right, bud. It's time
for no stupid questions. Just stupid
Only
answers. Lots of those.
Talking over each other.
Lena, get on and save us.
All right.
All right.
First question of the week. Hi, Kevin and Patrick. I'm a fairly new listener and I love the show. I'm a geologist, so I have a good handle on the mining and commodity sector, but I am fairly new to investing. I'm currently invested in a junior copper company, ticker OCO, that is in an advanced exploration stage on one of their properties. They intend to sell the deposit to a major who will develop it. I understand that when the property is sold, shareholders will receive cash based on the deal. What I am wondering about is how the share price and cash per share would shake out in the end. Would it make sense to trim some position leading up to the deal, or would you hold it all and just pray the deal is somewhat even with the share price when it's all said and done? Can you share your experiences with how to play M&As?
Okay, so I'll take this one, Patrick.
Yeah.
And first of all, we don't have a clue about OCO, so we're not going to we're not giving advice for that. But we will talk in general how these things work. And I'm going to echo the words of Will Thompson from Massive Capital. And when he was on, he highlighted this as well. The typical kind of life cycle of a junior exploration company is that there's all sorts of excitement. And if they're lucky enough to hit, the actual peak is, I guess, in the midst of that excitement. And then in the period between while they're kind of like figuring out how big the resource is and the point where they actually go and raise money to put it into production, there's a lull. Basically, it's because the market, there's no more new news. They're having to raise money to create the mine. And so often what will happen is you'll get this spike up higher as they find a new deposit, peak excitement, and then it drifts lower and then maybe goes sideways for a long time. And then right kind of before development, when they've raised all the money and it's the point where investors can start to see the cash flows that are going to come, the stock starts to take off. And at that point, it could be that maybe the major buys it out, or it could be that it continues to trade. But that is the general kind of typical life cycle of a junior mining company that finds a property and then goes through development. Hope that helps.
Oh, okay.
Plus, you know what? He's a geologist.
agree.
He probably knows way more than us.
Yeah. All right.
Second question. Hey guys, you briefly mentioned the slope of a trend line in your past episode. I get what it means. As spot goes parabolic, the slope of your trend line gets steeper. But how do you use that in an investment process? Is it a bullish or a bearish signal? Or is it like everything else and entirely situation dependent? Thanks and have a great weekend.
So I'm going to Patrick's going to answer this one, but I'm going to take kind of issue with the idea that it was only briefly mentioned because Patrick mentions this every week. Okay, go ahead, Patrick. Answer the question.
Well, no, but so I mean, it really comes down to so the real question is how do you trade it? All right, like I mean, recognizing.
Do you want to pull up a chart and show? Oh,
yeah. So here's lumber. So here's lumber, right? And we've got it's just going full on parabolic, and so we always kind of identify that the slope of the trend line, like the rate of change on the upside is accelerating, right? Like this thing is just going, it just keeps getting steeper and steeper on the upside. Now, the first thing that early in my trading career, my first intuition was to short that. And the quick thing to learn is that if you enjoy getting your face ripped off, then go. That's you can go ahead and do that. But when these parabolic rises, the problem is that whether it's a crypto or whether it's lumber or whether it's any of these stocks that are doing these parabolic things, or whether it's GameStop or whatever it was that's ripping that way, these things, once they gain momentum, it's like a freight train going down the tracks and trying to be the rock star to predict where that 5,000 ton machine is going to stop on the tracks. You're just going to get run over. So you generally want to only consider short selling it after the top is in, and then it goes through one of those deep multi-month mean reversions. You're not going to get the exact top, but at least you know that the trend is your friend that once it's already turned, right? But generally, whenever you see that parabolic rise, I think the single most important thing to do is learning to take profits into that white heat. Right now, we use the term white heat. I remember some floor trader once used it, and it's just stuck with me. It's this idea that there's that saying in from Goldman Sachs, which is like when the ducks quack, you feed them.
I don't think that's a Goldman Sachs thing. That's as old as
that's old as time.
Yeah.
But the thing is that when you have white heat like that, and speculators want to buy at any price, it would behoove you not to give them some of your shares. Like you got to lock in profits because that market condition is not going to last forever, and locking in, turning paper profits into real profits into that kind of parabolic rise is always a very important exercise, right?
So I like the term white heat, Patrick. I'm looking it up, trying to figure it out. I don't know if it's from the movie, and I was thinking about you when it says a psychopathic criminal with a mother complex. Then I decided to try the Urban Dictionary, which is always sketchy and worrisome. I'm gonna leave the first one alone. But the second one is can be traced back to the mid '70s to David Bowie's or Bowie, as the British say, alter ego Ziggy Stardust, and it describes the freebasing of heroin.
Oh,
that's what you got to be doing. Anyways, if you're buying lumber up here, that's what you're doing. You might as well be freebasing heroin with Ziggy Stardust. Okay, let's go to the next one.
All right, last question of the week. Hey, Kevin, Patrick, and Lena, thanks for all you do. Great show this week. I got to figure out how to export you guys some legit beer from Chicago.
Okay, wait. For sure. That's awesome. Anybody that wants to send us some beers, just reach out, DM us on, or actually just send us an email at where do we send the no stupid questions?
At markethuddle.com.
There you go. Just send it there, saying that we'll send it, and one of us will give an address. I would love some Chicago beer. Big fan.
Well,
awesome
I'm gonna be in New York City, Miami, and maybe Chicago here in June, and I'm probably gonna need an extra luggage thing, and then we'll see whether they let me across the border with
Just all we need is don't give us too many. Give us 3 of each one because we don't need more than that. Unless it's a really good one, then give us 6 or 9. But those IPAs to only 3. Anyways,
All right,
sorry, let's
big
read the
fan of Chicago. Anyways, go on. Sorry.
Moving on to this listener's question. I saw that you guys mentioned U.S. steel in talking charts. For the last few months, the Street has been saying steel prices will cool off after Q2. Everything smart I am hearing seems to disagree. Cost push inflation, green economy, infrastructure, HRC futures action, China news, etc. Cleveland Cliffs, ticker CLF, Q1 earnings call from last week in particular is worth a listen. Who is going to win this one, the Bulls or the Bears?
Do you want to take this, Patrick, or me?
Well, I'm going to let you take it, but let's put up these charts first. So the U.S. steel's been more or less working higher. It's been muddling along after pushing to a higher high back in March, and it's really hasn't been able to really punch higher. And then just have a quick look. This is the Tata Steel future contract, but steel prices have, at least on this contract, been running like lumber.
Yeah. Scary.
Right? But the thing is that when I see this chart, it's like kind of late to chase a little bit. I mean, it certainly has been a
but
great
that doesn't
trade.
mean that that's what Cliff Steel's like the
No.
stock will do, right?
No, it's not.
Cleveland Cliffs or whatever it is.
That's just looking at the actual steel futures themselves. But anyway, so go ahead.
So what I was going to say is that this is kind of indicative of a situation that we've seen in many parts of the market. There's a whole crew of quote unquote the street or market participants that are looking at this and saying this is a sugar high, and what we're going to have is 3 months, 6 months of crazy growth as things reopen and there's supply, restrictions, and there's all this demand, and there's going to be as good as it gets at that point, and then the thing is going to go back down. And we see this trade occurring, this battle between those who believe that this is a secular change where we can have growth for a long time, and those who believe this is just a one-off kind of, we'll go back to the deflationary, scenario. The guys that Patrick idolizes, all those kind of, real doomsdayer kind of
Fucker.
the world's always ending kind of folks. And so this is happening in not just
My kind of guys.
Yeah, your kind of guys. So it's not just happening in Cleveland Cliffs. This is happening everywhere. Obviously, you probably know which way I err on, and I think that this earnings and the economy is going to surprise for some time to come. But having said that, you always do need to watch and see what's going to happen in terms of the fiscal and monetary policy. There's no doubt that if we got a change in attitude and all of a sudden government started to get fiscally responsible and tried to balance budgets, and at the same time if central banks decided that they were worried about inflation and were going to raise rates, then the tune would change. Having said that, I see neither of those situations on the horizon, and so I look at it and say I think that the economy and things like steel are going to continue to surprise on the upside. That's my 2 cents.
I think that's a little overdone. I think in the bigger picture, if you're talking about a multi-year time horizon, I think that your narrative is pretty right. But these things have already had big runs, bud.
Yeah.
Like it's you almost have to plan. Like, you remember when Chase earlier was talking about how he got in early, but some of his clients that got in 4 or 5 months later, they got washed out when there was a 30% correction. And he was like, "What correction?" He didn't even notice because you got in early enough.
Right.
I think the problem here is if you're chasing today, then that one correction that comes could really shake you out because you just didn't get in on the early entry. And so, like, while I understand your bullish view, and I'm actually not going to push back, I'm commodity bullish. I just don't see this being a tactical time to be aggressive. I mean, at least you have to leave enough powder dry to dollar cost average your way in if you're really determined long term.
And that's what makes a market. So, Lena, where can people, write in if they want their no stupid questions answered in a stupid way?
They can submit their questions to nostupidquestions@markethuddle.com.
Or if they want to send us beers. Okay, thanks for tuning into the Market Huddle. We appreciate you spending some time with us. Please give us a follow on Twitter @the Market Huddle. We're there every day. Lena, does a great job, and she gets tired of talking to Patrick and myself. You can listen to the Market Huddle on all the networks: Google Podcasts, Podbean, Spotify, Android Play, iTunes, and YouTube. A lot of people watch on YouTube to see all of our charts and visuals, and while you're there, please like and subscribe to get our latest content. And this is the point where I say, could you write us a review on iTunes? But instead, I'm going to read one. It's more fun reading them. Okay. This is from Smatty Balls.
Snotty nose.
He's our kind of listener. Writing this because I feel sorry for these guys and I want to give them some help. Just kidding. Solid content with opposing views and arguments. If you enjoy banter about the financial markets, beer, and constant shots at millennials, then this is a pod for you. I disagree with that. I'm going to take issue. I love the millennials. I hate their beer.
Yeah. See, I don't even hate their beer.
Yeah, that's true. That is absolutely true.
You know what?
But you know what? The reality is we're Gen X and we just don't care. Regardless.
Yeah, we don't.
Like it's
true, we don't. Like if we were boomers, we'd care,
Yeah.
but we're Gen Xers.
Yeah, we just don't
right?
care. Just have another beer, even if it's bad. Okay, that's it. Patrick, where can they find you?
You can find me on Twitter at Patrick Ceresna, and you can find me at the bigpicturetrading.com website. Kev, where can they find you? Your wonderful letter with amazing pictures.
With amazing pictures. That's all you watch. So I'm on Twitter at Kevin Muir, or you can go check me out at the www.themacrotourist.com. And listen, we can never have too many friends, bear market, bull market. We're just happy to spend some time together on this crazy ride. So thanks for tuning in. Now stick around for the after show.
There you go.
There you go.
Another show in the bag.
Okay.
Hey, so what do you guys think of this beer? I'm drinking Grolsch. I can't believe
that's
I
a
didn't.
good beer. I like that.
Yeah, but I got squeezed out of. Actually, you know what? I didn't really want to drink a pine tasting beer. So
I'm going to give this higher than it deserves because it's a pine tree. And not only that,
this is for Chase. Chase, this is for you, buddy.
Yeah, and it's got it's a pine tree. It's got Canadiana. It's got Canadian Shield. Actually, I was wondering, does everyone like outside of Canada know about the Canadian Shield? They probably don't.
No,
Probably not.
no.
There's a section. I better look this up before I tell everyone about it because I'm going to make a fool of myself.
Well, Lena, why don't you rate the beer while he goes and
looks up the Canadian Shield?
Okay. I mean, it lives up to its name, Lone Pine. It's definitely a piney for sure. It's a little too hoppy for me, so I'm giving this a 6.8.
Wow.
That's bullshit.
Probably
That's bullshit.
It's not. That's
rating.
perfect.
That's a bad
It
rating.
is, but you know what? You know what? I felt like she really meant it, and you shouldn't shit on her for that. Like she gave an honest score. That was an honest score.
Defend this because it's a pine tree.
No, but
it.
now you're being biased.
I am. Of course, I'm being biased.
It's like me being a Toronto Maple Leafs fan. Suddenly you get they put a Canadian Shield and a pine tree on it, and we have to immediately think it's amazing beer.
Okay,
whatever.
Anyways, I'm giving it a 7.5, even though I kind of agree
that much
about.
higher. What are you talking about?
Yeah,
I mean, you're an easy marker, so 6.5 is one of your worst marks.
Is it 6.8?
She said 6.8.
Oh, I'm sorry. I thought it was 6.5. Okay, I take back all my comments. 6.8 is okay. Let me explain the Canadian Shield. Okay, I didn't know this, Patrick. It's called also, and Lena, it's also called the Laurentian Plateau.
Ooh, I didn't know that.
I had no idea. Okay,
Sounds
and
fancy.
it's basically a large area of exposed Precambrian indigenous. I don't know how to say that. High grade metamorphic rocks. So basically, it's a huge hunk of rock, and it's
pretty damn big.
It is. It's monstrous, and it goes.
It's big. It's bigger than most countries.
Yeah, and it's all of Quebec, and it goes. It's a lot of Ontario, not where we live. We're not in Canadian Shield. Yeah. And it then goes all the way to Manitoba and then goes up. And you kind of know it because when you're driving along, when you're going up north, you'll see the spot where it'll go from deciduous trees, meaning trees with leaves, to much more of the evergreen trees, and it's a change, and there's all sorts of rocks, and it's almost like you can see it. Mm-hmm. And I know when I grew up in Winnipeg, we would drive to Lake of the Woods, which is actually in Ontario, and Manitoba is a prairie province, but you would be driving along, and literally, all of a sudden, boom, you would hit the start of the Shield, and it would change from this prairie type, land to bang, that kind of true Canadiana, the rocks and the granite and all that kind of, all those trees. So yeah. It's obviously you can see I'm a little biased.
A little bit.
A little biased.
And
I like
and,
the Canadian
and so biased that you gave it a 7.5, which is like so down the middle of the score. So clearly this is a shit beer. Because like
No,
if you
it's got a great logo. It's got a great tagline. I'm sticking with it. It's a good beer. It's 7.5.
I gotta say, I've only drank half of this can so far, and I'm already really
normally.
buzzed. So
Oh,
that's
is it a
that's
little?
the upside.
Is it?
It's 6.5%, right?
Yeah,
Anyways.
it's like six and
It got me. I'm a Canadian boy at heart. Like if they put a Tragically Hip guy on it, I'd be. We should do it. I think Tragically Hip has their own wine. Let's see if they have their own beer.
We'll just have a Tragically Hip wine.
Yeah, you know what?
session.
We should do that for.
That'd be
You know
okay.
what we'll do? Let's do that for Canada Day.
All right.
Alright.
Done.
Let me see. There's definitely
I'm in.
the Tragically Hip wine. Okay, let's see if there's a Tragically Hip beer.
But we each got to polish off one bottle by the end of the show, so I'm slurring.
And I'm looking this up. Tragically Hip sues Mill Street Brewery over the 100th Meridian beer. And actually,
Really?
I subscribe to the Tragically Hip's little update where they send me stuff, and they did send something saying this is bullshit. Mill Street Brewery made a beer called the 100th Meridian, which we all know is a Tragically Hip song. And they didn't ask permission or anything. They just did it. So they
Yeah, but like
that's
I mean,
bullshit. No, they shouldn't do that. I'm with the Tragically Hip. That's bullshit.
you can't just own that 100th
Listen,
Meridian as.
I'm not trying to say that legally they shouldn't be allowed to do it. From like it
It's
just
in poor
seems
taste.
wrong. To not ask them just seems wrong. What do you think, Lena?
Yeah, I mean, legally, I don't think it's it stands up that way, but morally, it would have been nice for them to ask them.
If they stole lyrics out of their song,
know.
that's one thing. It's a title. It's 2 words. Like, you know what? Like, I call BS on
Well,
that.
you're
No.
obviously not a Tragically Hip fan.
I love Tragically Hip. I just think that's a stupid lawsuit.
So I didn't actually like them for the longest time when I was growing up, and then I got dragged to a concert when I was, I don't know, in my 20s. And I always say that anybody who's not a Tragically Hip fan is just not listening to them loud enough. That's how honestly,
It's all about volume. It's just
honestly,
you
that's how
just didn't listen loud enough.
that's right.
You don't like it? Hold on, let me turn it up again. Let's listen one more time.
So Lena, you're a different generation. You probably, barely had them on the radio when you were growing up.
What's
what do you
radio?
think of the Hip?
I'm kidding.
Yeah, the radio. What the hell is that thing?
What's a
No, I
radio?
listen to the radio. But I'm gonna admit that I don't really know that well.
That's fine. There's no problem with that.
I recognize their song. Like I would recognize the songs more than like I wouldn't listen to it and say, oh, that's Tragically Hip. I would just know the song, but I'd be like, oh, okay, I didn't know that was the band kind of thing. You know
Yeah.
what I mean? They're recognizable songs, obviously. I just don't know which ones are from which band.
I hear you. That's okay. How many times did you see them, Patrick?
Live?
Yeah.
Actually, embarrassingly, none.
Oh.
But a month before Gordy passed away, I ran into him in a Queen Street bar.
Oh, really?
After the concert, and I had a picture taken with him, and so I got to
Poor guy.
I got to say that
He's dying, and then he's got to like.
Listen, you show up at a bar.
No.
you're like
Patrick, you guys should be like, I'm gonna. Anyways, okay.
he was a nice guy.
He's an
okay?
awesome guy.
I wasn't being rude.
Okay.
Like
How do
If he
you
was
Anyway,
giving
but-
pictures to everyone and stuff like that.
But we had like a big concert that we we set up like projectors and shit like that for that final
For the final show.
concert. But I never saw them
For
live.
Americans that are listening or anyone for around the world, Tragically Hip are a Canadian band that could literally
That's-
fill our stadiums for a week. Like I think they did like play the Maple Leaf Gardens or the ACC.
Yeah,
for a
and
week.
once you leave Canada, no one
For a
fucking
week,
knows.
and
they
then
exist.
outside of Canada, like they would go and you go see them in New York, and they would play like 1,000 person club venue, and the thing is, it would just be 1,000 Canadians in
Yeah.
there. Right?
Following them
Honestly,
around on a
it's
US
true.
tour.
It's absolutely true. There's no other thing. And the lead singer, he went and he didn't win. He got terminal brain cancer, and instead of kind of being quiet about it, he came out and just told everybody and did this. And then they had this one last tour that they did. And it was really like when you watch the documentary about him, you realize how touch and go it was. Like he had to have the lyrics put in front of him, scrolling through. They thought when they started it, they went and they did, what was it, like 10 shows maybe? They went out west and then they ended at Kingston because they're a Kingston band. And the band members were like, there's no way we're going to make this. There's not a chance. But he came together and he did it. And it's they are the quintessential Canadian band.
Yeah.
The funny thing about it is that
Drinking Pinecone beer.
yeah. So when he was actually his one of the schools my son was at, his kids were there too, and we were all waiting around for like the kids to come out and stuff. And then I'm like, I kind of nudged my wife, oh look, it's Gord Downey, and she goes, oh, I've seen that guy forever, and she, like, who is he? Because he's like, she's kind of like Lena, she doesn't really know and stuff. And I go, what do you mean, who is he? He's like the lead singer of the Tragically Hip. She goes, oh, I was actually thinking to myself, he kind of looks like a rock star. He just had that kind of rock star vibe to him. It's hard to explain. Like, it's kind of a heroin chic kind of deal. Like, it's like, I don't know how to describe it.
Yeah.
Just you kind of know.
Oh,
He's a super nice guy. Awesome. I never went and bugged him. I just kind of let him be. But he's a super nice guy.
That's only a douchebag thing.
That was only Patrick that was doing that. I would just... but they're awesome, and if you don't like them, you haven't listened to them loud enough. That's
just crank it up.
Just crank it up, man.
A bunch of our listeners are going to now go on to their like Spotify's. They're going to listen. I'm just going to say, crank it up. You can't listen.
Nah, you know what? It's hard. Nobody really. You don't get any new listeners to it. Very few people listen and go, "That's awesome," and it's because they're not listening loud enough, though. I had this guy on Twitter that literally he was chatting and going back and forth, and then he said something about the hip, and I was like, oh, he's Canadian. I said to him, oh, I didn't realize you're Canadian. And he says, no, I'm actually not Canadian, I'm American, and I stumbled upon this band and I love them, and I don't understand why nobody likes them. And he's literally the only non-Canadian guy I've ever met that likes the hip. That's it.
There's only one of them.
There's one of them. Maybe there's two. Okay. Well, anyways, let's talk about something else. People are probably fed up with enough Canadian.
Yeah.
Anyone watch anything interesting?
No.
Oh God.
I'm actually I was going to watch the new Handmaid's Tale, but I'm gonna wait until they release more episodes so I can kind of binge and learn.
Oh, you binge? You don't like it like when you like something and then you gotta wait.
Oh, when Sopranos came out and I had to wait every week. No, I didn't want to do that, so I didn't watch it at all, and then I just watched it all once the show was over.
She's a binge watcher.
I can't wait for that week, not knowing what's gonna happen next. That's when the show's good.
I can't do that. I would watch it every week because I can't wait for it because I like it too much. I gotta watch The Sopranos again.
Yeah.
I have them all, and I'm embarrassed to say I have them on DVD.
You have a DVD player?
Actually, I don't even know if I do. I must have one somewhere.
That's the funny thing. Yeah. I don't know why they're on my shelf, but I have VHS tapes, like the entire James Bond series in VHS. Nice. And then I have a whole bunch of DVDs, and I don't have a VHS or DVD player. Yeah. They're there. Whoa. They're there, and I don't want to throw them out for nostalgic reasons.
Patrick, I got a whole bunch of iOmega zip drives at home that are zip discs at home that are all my computer backups that I, for some reason, don't want to throw away, but I don't have the drive.
Yeah.
You have no way to
if I ever have to back it up.
Well, no, it's like, what's on here? And now I don't have the drive, so I'm not even sure that I should get rid of it. And then the longer that it goes by, the more you're just like, I'm never getting this off. Like, nobody has an iOmega zip drive.
Well, yeah, you're done,
I'm showing my age.
You're
literally
done.
There's one point, eh?
I don't. What?
iOmega? Do you remember that? That was a hot. Yeah. That was like the go-to stock. It was pretty exciting stuff. Anyways, it was the zip drive, and it had like, oh shit, I don't know, 100 megabytes. I'm sitting there. There it was, a whole whopping 100 megabytes.
Some of our listeners are like, What do you mean? You mean like?
Yeah.
What is a megabyte?
Well, and
I've
some of
never
our
heard that.
listeners are like, I told you they were boomers. They're not Gen X. That makes me laugh.
But yeah, maybe those VHS tapes will be worth something since it's an antique now. They don't
Yeah, those
exist
are-
Oh no, I'm
anymore.
just
Which
those
ones
are-
do
I-
you have?
they make great door stops.
No.
You can use
Those are
you
quote
can use
unquote
them to
Patrick's
stack shelves.
quote unquote home movies.
Just in James Bond sleeves.
Yeah.
Yeah, that's right.
Which James Bond
You
movies?
do not want to watch what's on those VHS movies.
Don't ever
Oh
put
my
that.
gosh. Good
What's
thing-
really funny is if you ever see, like, I think that I have, you know how I have my big database of different pictures, and like you'll see that I have this one of this VHS tape, and it says like Sarah's graduation, and then it's like crossed off, and it puts like Ghostbusters 2 on it. Like they went over Sarah's graduation to like put on Ghostbusters
to
2,
record Ghostbusters. Oh my
which is a good flick. I understand. Like, I get it.
But I started listening to that podcast that Mrs. Macro Tourist likes to listen to, My Favorite Murder.
Oh, you did?
And you like it?
Yeah.
And do you like it? Are you like as hooked as she is?
I listen to it when I'm working out.
Oh, she loves it. Those two women are
They're funny.
sensation.
They're
awesome.
hilarious.
Like Karen is like, I got dragged, Lena. I got, or maybe I didn't get dragged. I might have bought it for her for her birthday. Anyways, they go on tour.
Yeah, they have like a live show, I guess.
Yeah. And they go on tour, and they literally, it sold out the Hummingbird Center, although I'm showing my age there. What is it called now, Patrick?
Oh, I don't even know.
The-
Sony Center.
The,
or
the,
Sony
it used to be
something?
I'll show you how old I am. It used to be the Carling O'Keefe Center, which was a decent beer, by the way. What
So
is
was
the one
OV.
down by Front and Young? What is that? What is that
It was-
venue?
Yeah, isn't the Sony Center?
Was that
Sony
called the
Center
Sony
now?
Center? Okay, they sold out the Sony Center.
Whoa.
Yeah, it was a big deal. And then the scary thing is they ask for people to come up on stage and tell their stories.
Oh, jeez.
What's called Meridian Hall now? Is that right?
Is
That's
it
what
really?
I'm looking it up too. I'm like, Hummingbird Center.
I
is
think it's
now
called Meridian Hall now.
Oh, like Meridian, the financial institution.
I'm assuming.
Yeah, but if they put 100 in front of it, then they'll get sued by the Tragically.
Yeah, it's 100 Meridian Hall. So anyways, you like it, eh? Like, it's pretty awesome. Actually, the one woman, Karen, is hilarious. She's really
they're
good.
both really good. I was kind of skeptical start listening to it at first.
Yeah.
Because of some of the other podcasts or shows that I've listened to when it's just women, sometimes it gets a little catty. And
Yeah, okay.
I'm not a big fan when it turns into that. And
Yeah.
I was kind of skeptical about it, but these two women are hilarious.
Yeah, and
I am
not. There's no
hooked.
cattiness going on there.
No, it's so funny. And, they also talk about murder stories, so it's like
Yeah.
a double whammy for me.
Yeah, well, exactly. That's why it's such a big hit with women. You guys, for some reason, love the murder stories. I don't get it. It seems to be something you like.
Luke is always like worried. It's like, well, you're always watching like, oh, very bad men. Oh, you're listening to murder stories. Like, what are you trying to do?
I know,
Like,
it's-
I don't know. It's just entertaining for me.
Well, it's you're fascinated by it. Oh, this guy. Like, my wife's the same way. She's like, she wants to talk about it all the time. I'm like, I don't want to know how the guy dismembered, 14 women, and like. And she's like, aren't you fascinated by it? And I go, no, he's all fucked up. Like, I just don't want to know. Like,
I don't want to know either.
yeah, and like,
that's-
it's not like
it is fucked
like
up.
they do. There's some that kill men too, right? Like, there's not like so. But it's just these.
It's a lot
these-
of morbid stories for sure.
Yeah.
These are like really disturbed. It's almost unbelievable stories, right?
Yeah.
It's like people can.
But they are funny, and they take a kind of a humorous approach to it. If you're interested in the Karen woman, she has another podcast. It's called So You Need a Ride or something like that. And it's her and a man, and they originally started. So Karen her background is that she's a comedian / actor, and she was actually the head writer at Ellen for a while.
Oh, okay.
Yeah, and I think she does not have nice things to say about Ellen, kind of between the lines. So she has a friend who's a comedian, like a professional stand-up comedian, and they live in LA, as you know from the podcast. And so they would go and they would go and pick people up from the airport, like their friends that were traveling around, that were comedians and stuff.
Okay,
And they
yeah.
would just tape it. And it would
Oh.
literally be like, so you need a ride, and they would go pick up this comedian and they would just chat. And it's obviously changed because of COVID, and they're under kind of lockdown there like us. But I actually really like that. So you need a ride. I'm just
Is that kind of like Jerry Seinfeld's? What is it?
oh yeah. What is
Coffee
it?
thing, or
Yeah.
What's that called? I can't remember what it's called now.
Comedians in cars getting coffee.
Yeah, is that kind of
that
kind of the
one's
same
much
sort of
obviously that's slick, right? Like it's the same deal, but Jerry does it slick, and
high budget?
they're editing and
It's
stuff.
Jerry.
Yeah, this is like, do you need a ride? Is them pressing play, record and then just going.
Oh, it's like our
Like
show.
you hear them like driving through Starbucks and stuff.
Okay.
Yeah,
Yeah,
they
I'll
have less
probably like
editing
that.
than we do.
I'll probably like
They're
that.
literally just pressing play. Anyways, it's really good. Do you need a ride? That's what it's called. And I really like it. I actually like that better than the murder ones.
Oh.
Yeah.
Because they don't talk about
No,
murder.
stories are fascinating. I listen
Yeah.
to
See, I
Oh
don't
my
really-
God,
I don't
stop
know.
it,
But I
Lena.
listened
This
to
is-
a few episodes. I'm like, oh, I know this one. Oh, I already know this one. I watched a whole bunch of murder stories already on
That's my
TV.
wife as well. She's like, oh, I know all about that. Blah blah blah.
Woman to Murder is like men listening to World War II videos.
Well, those
like,
are awesome, though.
I watched
See,
those
that's
too.
exactly it. I love
or Vietnam documentaries.
yeah,
I love
any
them.
documentary
Yeah.
on war.
I
Like
like
guys
war.
are like,
Yeah, I'm with you. I could watch like a Ken Burns like documentary on war. Awesome. Actually, I do have something to tell you that I watched this weekend.
all right, what you watch?
I went and Ken Burns. I'm a big Ken Burns documentary fan, and there was one I had to pay for it. It was the Ken Burns documentary on Hemingway, and Hemingway is by far my favorite author. And I was like, oh, you had me at like Ken Burns and Hemingway. I was like,
And you have to
boom,
pay
take
for
my
it, so
money.
you know it's
Take
good.
my money. Take my money.
Yeah.
So I watched it, and it was awesome. And all I can say is that guy was really messed up.
Wait, where did you find this to pay for to watch?
I was on my Apple TV, just
Okay.
drinking beer all alone, and like,
All right.
anyways.
Drinking beer,
'Cause everyone's
putting
away.
credit
I'm
cards
literally,
into the thing. Like,
It's very, very fitting for
Usually
Hemingway, 'cause
guys
that guy,
buy
like,
other
he's
things.
Literally, like he's an alcoholic, and he's a wreck. Anyways, fascinating. Huge fan of Hemingway. Really enjoyed the documentary. Ken Burns is awesome, and if you're a Hemingway fan, you'll probably enjoy it.
there you go.
Yeah. Well, there you go.
All
okay,
right.
well, we should call it a night.
Well, it was a great show. I had a lot of fun.
Everyone, you should really give Chase this, send him an email if you're interested in his letter. It's really one of the great letters out there. I think Chase is such an understated guy, but he really does a terrific job. And he's not one to toot his own horn, but someone should toot it for him.
Well, we're gonna include his email address in our email
Yeah.
blast. So.
No, honestly, he's nailed a lot of trades, and he's really terrific, and he's just. You can tell he's probably an introvert by heart, and this is hard for him and stuff. And it's such a kind of a welcome breath of fresh air versus like all the gurus you see on FinTwit that are busy, slapping their, pounding their chest at every little thing and stuff. And he's almost like the opposite. Anyways, I'm a big, huge fan of Chase.
Yeah, he's a great guy.
Anyways,
All right.
All right. Great show. Have a great weekend, everyone.
take care, everybody.
right.
Thanks for
Okay,
tuning in. We'll
cheers.
see you next
Bye-bye.
week.